Yeah, what I'd say today is it's clear we have a pro-crypto president. They're all in on crypto. They're all in on Bitcoin. They're progressive. They're all about freedom. And freedom means, the 20th century securities regime was you got to spend $40 million on compliance to bring a company public. But what if I only want to raise $4 million in capital? How does it make sense that I got to spend $40 million on insurance in order to take a $4 million risk? So I think actually when we come January, depending upon who runs the SEC, I think you'll have a pro digital assets SEC, a pro digital assets Treasury, a pro digital assets White House, a pro digital House and Senate. Now, if you want the crypto industry to grow and prosper in the United States, you need a digital assets framework that is ethically sound, technically sound, economically sound.
Today, we're diving into a narrative that connects global tariffs, revolutionary stablecoin legislation, and groundbreaking partnerships to one explosive claim. Michael Saylor just confirmed it, and XRP holders are set to cash in big in 2025. Now, how does all of this connect? How can international trade disputes, U.S. legislative maneuvers, and even a potential digital transformation by Michael Saylor shape the future of XRP? Stay with us as we untangle this web of financial intrigue, where every twist and turn leads back to that headline-making confirmation.
We're in the Bitcoin gold rush. It started in January of 2024, and it will run till about November of 2034. How many people know what happened in November of 2034? In November of 2034, 99% of all the Bitcoin will have been mined, and the last 1% comes out over the next 100 years. So for all practical purposes, the stock-to-flow ratio of Bitcoin is infinity in 2034. It becomes noise. At the beginning of the gold rush, no bank could custody Bitcoin, no institutional investor could buy Bitcoin, no Wall Street trading firm. When those spot ETFs were approved, that created a fire or an avalanche. The genie's out of the bottle. It doesn't matter who's elected president next. It doesn't matter who's the next head of the SEC. No politician's opinion, no banker opinion, no regulator opinion matters after that date. That kicked off the gold rush.
In a world where global tariffs are reshaping international trade, the focus isn't just on who pays more at the border, it's on how money moves in a digital age. We're witnessing tariff wars that have escalated between the United States and nations across the globe. When tariffs increase, the cost of cross-border trade surges, pushing industries and governments to seek smarter, faster, and more efficient payment solutions. Enter stablecoins.
Volatility in cryptocurrency has been a barrier for wider adoption, especially for businesses that need stable transaction values. And stablecoins solve that issue by anchoring their value to stable assets like the US dollar. This stability is especially important for international trade remittances where predictable transaction values are super important. With XRP as a settlement token alongside stablecoins, Ripple is able to accelerate the process of cross-border payments that once took days can now be settled in seconds.
Stablecoins are not just a buzzword. They're emerging as the answer to the growing demand for digital efficiency. By providing faster, cheaper transactions and reducing reliance on clunky traditional banking systems, stablecoins are revolutionizing how international money moves. And with legislative clarity on the horizon, stablecoin legislation expected to pass this year, the stage is set for an unprecedented transformation in digital finance.
Well, I mean, what you say there is just, not true. The reason we have an exchange-traded product in Bitcoin, for example, is because people went to federal court to compel the SEC to do it because their arguments in court blocking it for years were incorrect. And so we have the courts to thank for Gary Gensler's bad regulation by enforcement.
Yeah, but he's gone now. So he's gone now.
Yeah, he's gone. Sure. Okay, well, look, he's gone. That's true. But that doesn't change the fact that crypto has been under assault by the SEC over the past 4 years. And so the reason for legislation is to have a regulatory clarity that directs the SEC and the CFTC exactly what they need to do to protect investors, encourage innovation, encourage companies to use blockchain. And that's what we're going to do. We're going to pass regulatory clarity.
But what does this have to do with XRP? Well, think about it. Amid the evolving regulatory landscape and the push for faster cross-border transactions, the XRP ledger is uniquely positioned as a bridge between traditional finance and the future of digital payments. And when you layer on the undeniable influence of power players like former executives and industry visionaries, the picture becomes even clearer.
It's a financial system built into the internet, and public blockchains are absolutely critical to achieving this. I believe what Ripple is doing is spinning up private blockchains for most of these entities and then saying, hey, here's how you connect to the public XRP ledger to access public liquidity. I believe this is the most important part of the equation, and the private blockchains and public blockchains go hand in hand.
Tariffs, stablecoins, and a digital revolution, they're the unexpected trifecta shaping tomorrow's economy, one industry insider confides. And indeed, the recent chatter has been electrifying. Imagine a scenario where tariff disputes push the US government to bolster its digital finance arsenal. President Trump's well-documented preference for tariffs over sanctions wasn't just about economics. It was also about maintaining US dollar dominance in a rapidly changing world. Advancing stablecoin legislation would reinforce that dominance, not by resisting change, but by harnessing it.
Is there anything China, Canada, and Mexico can do tonight to forestall your implementation of tariffs tomorrow?
No, nothing. Not right now, no.
Not a negotiating tool?
No, it's not. No, it's a pure economic. We have big deficits with, as you know, with all three of them.
Cue a closer look. Stable coins, most of which are pegged to the US dollar, could soon be the cornerstone of international trade deals. There's speculation that these digital assets might even serve as bargaining chips in negotiations, potentially lowering tariffs when traded over efficient, blockchain-based networks like the XRP ledger. It's a bold idea, one that redefines the rules of engagement in global trade.
The first is that stablecoins essentially became uncoupled from crypto volatility, and it started to be used for wholesale useful functions in running businesses. And there's an image here that starts to show that. So independent of crypto volatility, what you saw were stablecoin usage just rising up and to the right. That's an incredibly important decoupling that happened in 2024. The second, and this data is still just trickling in, but it's an incredible stat.
Now let's pivot to another riveting development that's heating up the conversation. In Utah, a quiet but monumental shift is underway. The state is on the brink of becoming the first in the US to adopt Bitcoin reserves, a move that could transform public investment strategies. With a bill already passing the first phase by an 8-to-1 vote, Utah is setting a legislative precedent. The accelerated 45-day process could soon see Utah officially integrating digital assets into its financial framework.
I guess it's possible that the Sovereign Wealth Fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You're going to have to ask the incoming Commerce Secretary, Howard Lutnick, about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Senator Cynthia Lamas and economic trailblazers like Dennis Porter of the Satoshi Action Fund are buzzing about Utah's potential to become a crypto pioneer. It's sink or swim in 45 days, Porter remarked, emphasizing the political momentum that Utah enjoys. The idea isn't just about holding Bitcoin reserves. It's about signaling that digital assets, including stablecoins, are here to stay. And in the broader narrative, this move indirectly amplifies the significance of XRP as a tool for efficient, real-time transactions on a global scale. And while Utah might be quietly rewriting the rulebook on digital reserves, another frontier is exploding with activity halfway around the world. Generation Infinity has just revealed a game-changing partnership between the Australian Digital Dollar Initiative and the Hedera network. The Australian AUD-backed stablecoin, known as AUDD, is set to leverage both the Hedera and XRP ledgers, opening up a new realm of cross-border transactions. Remember back in September when the buzz first started around the Australian digital dollar? Now, fresh details confirm that the partnership will soon test Ripple XRP-enabled on-demand liquidity for cross-border payments. This isn't just another crypto project. It's a strategic alignment between regulatory-friendly digital assets and the robust infrastructure provided by Ripple's technology. With live deployment of the AUD on the Hedera network expected in the third quarter of 2025, the countdown to this financial revolution has officially begun.
You need to watch this if you're into crypto. Utah could soon be leading the Bitcoin revolution in the U.S. The Beehive State is buzzing with excitement. Utah could be the first U.S. state to pass a Bitcoin reserve bill, thanks to a shorter legislative window and strong political momentum. Dennis Porter, CEO of Satoshi Action Fund, said it's sink or swim in 45 days. No one else has a faster calendar or more willpower to get it done. On January 28, a Utah House committee voted 8-1 in favor of a bill allowing the state to invest public funds in Bitcoin and other big-name cryptos. Historically, every bill passed by this committee has become law. Arizona is the only other state close to this stage. While others like Illinois and Texas are just getting started, federal efforts are also in motion. U.S. Senator Cynthia Lummis is pushing for a federal Bitcoin reserve bill, aiming for the U.S. to own 1 million Bitcoin in 5 years. Imagine that. Utah and the U.S. could lead the global Bitcoin movement.
This partnership is not only a technological breakthrough, it's a signal of confidence from traditional financial institutions. As trade finance becomes more intertwined with digital payments, leveraging networks like XRPs will be essential. It's another piece in the puzzle that reinforces our main narrative. XRP's role is only set to expand, and Michael Saylor's recent confirmation has further cemented that future. Now let's shift our gaze to the land of the rising sun. These recent weeks mark a pivotal moment in Japan as SBI Shinsei Bank and SBI Remit launched an international remittance service using XRP. The service aims to offer cheaper, faster international money transfers, a critical need in today's interconnected world. For years, Japan has been a hotbed of financial innovation, and with SBI Holdings already partnering with Ripple, the adoption of XRP for cross-border payments is a natural progression. In a recent announcement, SBI Remit detailed the rollout of their new international remittance service, highlighting its potential to transform money transfer processes for millions. Multilingual support, enhanced security through distributed ledger technology, and rapid settlement times are just the tip of the iceberg. This development not only validates XRP's growing utility, but also sends a strong message. When global finance converges with cutting-edge blockchain technology, the benefits are undeniable.
In Japan, SBI Remit Company Limited and SBI Shinsei Bank have made a business partnership to improve international remittance services, focusing on faster and more cost-effective cross-border payments. In this collaboration, a key aspect is SBI Remit's prior exploration of Ripple's distributed ledger technology. This may also suggest there will be potential use of XRP or RLUSD to enhance efficiency.
As these transformative moves unfold across the globe, from legislative breakthroughs in Utah and Australia to operational revolutions in Japan, the financial world is witnessing a dramatic reordering of priorities. And while these changes might seem like isolated incidents at first glance, they are intricately woven together by one overarching theme: the rapid evolution of digital finance. Every new development, every legislative move, and every strategic partnership that we've explored today funnels back to one explosive truth. Michael Saylor just confirmed it, and XRP holders are poised to reap incredible rewards by 2025. The interconnected network of tariff disputes, stablecoin legislation, state-backed digital reserves, international remittance breakthroughs, and tokenized treasury initiatives isn't random. It's a meticulously crafted blueprint for the future of finance. But let's talk about the elephant in the room: Michael Saylor. Known for his bold predictions and no-nonsense approach to digital finance, Saylor's recent confirmation sent shockwaves through the crypto community. An AI-generated image circulating online even depicted him transforming into what unmistakably looked like an XRP coin, a visual metaphor that couldn't be more on the nose. When someone of Saylor's stature hints at a seismic shift away from outdated paradigms toward a future where XRP takes center stage, it forces us all to re-examine our assumptions.
The point I'm getting at here is the capital from the 20th century is going to flow into the 21st century. People are going to sell gold, going to buy digital gold. They're going to sell antiquated real estates and aged apartment buildings and natural gas fields, and they're going to sell soybeans or whatever in Siberia, and they're going to buy 21st century assets. And that means Bitcoin, among other things. And then capital in foreign nations is going to flow toward the West. Capital will flow from the East to the West, and it'll flow from Europe to the US. And the only reason it doesn't is because we don't make it easy for the money to move. And the way to make it easy, embrace Bitcoin, and anybody can buy Bitcoin anywhere in the world. There's 15,000 crypto on-ramps, and you can do it peer-to-peer. So embrace Bitcoin, and that is a capital network that the United States would own and benefit from. And all of the capital from your enemies, and all foreign capital, and all antiquated capital, and all inefficient, thermodynamically unsound capital, it would all flow into the Bitcoin network.
Saylor's comments are more than just market chatter. They're a rallying cry for investors who have been waiting for a sign that the digital asset revolution is no longer a distant dream, but an imminent reality. He's long been a proponent of embracing change, and his confirmation is a stark reminder that the financial landscape is in the midst of a radical transformation. With XRP's unique ability to facilitate fast, secure, and cost-effective transactions, the stage is set for it to become a cornerstone of global digital finance. And if that wasn't enough, consider the broader narrative. In an era defined by economic uncertainty and rapid technological advancement, holding on to assets that solve real problems is paramount. XRP isn't just another crypto, it's a utility token engineered to make cross-border payments seamless. And as more governments and institutions adopt blockchain-based solutions, XRP's role will only grow more critical. So what's the takeaway? Michael Saylor's confirmation isn't an isolated incident. It's part of a larger, meticulously orchestrated shift in the world of finance. From the halls of Congress to the boardrooms of multinational banks, the future is clear. Real-world adoption of digital assets is accelerating, and for XRP holders, the forecast is nothing short of revolutionary.
Traders Union Ripple price prediction. Current price $2.50. According to analytical forecasts, the price of Ripple may reach $2.90 by December of 2025.
As we stitch together these disparate threads, from tariff-induced stablecoin reforms in the US and legislative breakthroughs in Utah, to groundbreaking partnerships in Australia and Japan, and even the transformative insights of Michael Saylor, the narrative becomes inescapable. Every new development reinforces the inevitable. XRP's potential is skyrocketing, and come 2025, those who recognized its promise early will be rewarded in ways that defy conventional wisdom. Imagine a world where everyday transactions are powered by blockchain, where international remittances are processed in seconds rather than days, and where government-backed digital assets redefine what it means to be financially secure. That world isn't far off. The strategic moves we're witnessing today are laying the groundwork for a future where digital finance is not just an alternative, but the norm. And at the heart of this revolution is XRP. For XRP holders, this isn't just hype, it's a call to action. As governments and institutions pivot towards digital solutions, the infrastructure supporting these technologies is maturing at an unprecedented pace. And with major players like Ripple leading the charge, the momentum behind XRP is set to build exponentially. Every announcement, every legislative win, every new partnership is a stepping stone towards that explosive moment in 2025, when the promise of wealth and opportunity for XRP holders will be realized.
Ripple emerged in 2012 to revolutionize the world of cross-border payments. Unlike traditional methods, Ripple uses its digital currency, XRP, to enable instant and cost-effective international transfers. It's distinguished by its consensus ledger and unique consensus protocol, which replaces the energy-intensive mining typical of many cryptocurrencies. Ripple's solution addresses a multi-trillion-dollar market, offering banks a real-time gross settlement system. This integration cuts down delays in currency exchanges and brokerage fees, ultimately setting a new standard for global remittance processes.
As we draw this riveting story to a close, the question remains, what does the future hold for XRP and its holders? With every new innovation and every strategic move, the trajectory becomes clearer. Global economic challenges coupled with rapid advancements in digital finance are paving the way for a new era. And in this era, XRP stands as a beacon of efficiency and transformative potential. So as you sit back and process the magnitude of what's unfolding, ask yourself, are you ready for the next wave of financial evolution? The clock is ticking, and every day brings us closer to a reality where digital finance isn't just an alternative, it's the backbone of our global economy. What do you think lies ahead for XRP? Are we standing at the brink of a historic rally, or do you see challenges that could hold it back? Will Ripple's innovations and regulatory wins propel XRP to those ambitious price targets, or do you think the market might temper its expectations? Share your thoughts in the comments. We love hearing your insights. And if you don't want to miss out on the latest crypto updates, predictions, and analysis, be sure to hit that subscribe button and turn on notifications.